In episode 1, we stay on the summary dashboard and look at the key outputs: cash balance, burn rate, runway, taxes, and your overall financial picture. Now we are moving one layer deeper into the model, into the growth section, because this is where the answer a fundamental question. How many people are we able to bring to our business over time? Let's switch to the growth section by pressing growth in the left menu. The first thing you will see is the who is your target customer panel. Here you define who you are going after, for example, individuals, small businesses, or enterprises, or someone completely different. Later on, you will be able to add more target segments, but for now, set your first main target market and continue to the next step. At the top of the page, you will see your scenario selector, usually set to base scenario. We'll talk more about scenarios later in the series, but for now, think of the base scenario as your most realistic plan. Not too optimistic, not too pessimistic. Next, you will set up your first marketing campaign. Just click Add a new campaign, open the campaign dropdown, and select your first channel. This is where you describe how you plan to reach people. For example, through SEO, pay ads, partnerships, you name it. We have all of the other relevant channels to your business. Here, we'll set up an SEO campaign as our example. Give it a name, something like Organic SEO campaign, and hit save. Once saved, the tool immediately asks you three key things: when you will start, what is the cost to run, and how many people you expect to reach in the first month. These three inputs are what actually drive the numbers flowing through your financial model. So it's worth spending a moment on each one. For the start date, pick when you realistically plan to launch this campaign. For costs, you will notice the tool comes preloaded with common cost categories relevant to each channel. For SEO, that might include an agency retainer or keyword research software like Ahrefs or SEMrush. You can select these presets categories or type it your own custom cost name. Each cost you add here will automatically flow into your expense sections, as well as you never had to enter the same number twice. Then you will set how many people this campaign will generate at the end of the first month. For a brand new SEO campaign, that number will be small because SEO takes time to build. Something like 50 in the first month is a realistic starting point. Finally, you will set your expected monthly growth rate. This tells the model how fast you reach compound amount over month as your SEO ranking improves. SEO tends to be slow at first but accelerates significantly over time, and you can see that compounding effect directly in the chart. As you add campaigns, you will see numbers for how many people you reach in each year. Typically, you will start small and then grow as your marketing effort compounds. Maybe a few hundred people in year one, then much larger numbers as your campaigns scale and your brand becomes more visible. With our SEO example, year one might be around 500 people, but by year 5, that same campaign could reach over 500,000. Make sure to click the 5-year total view. This is often one of the most compelling moments when showing the model to investors, because it makes the compounding effect of organic growth very visual. These are not yet paying customers. They are people you've reached or attracted. Later, in the sales section, we will link this reach to conversion rate, pricing, and cost of sales, so the model can translate reach into revenue. The power of this page is that it lets you answer the what-if questions around growth. By adjusting your campaigns and assumptions here, you can see how your potential customer base changes over the next few years, without touching any formulas yourself. And because Uniflow is connected end-to-end, these changes will flow through the revenue, profitability, and runway automatically. Next, let's move to a seasonal adjustment tab. Not every month is equal. Some businesses are very seasonal, with peaks and dips across the year. In the tab, you can shape how your growth is distributed throughout the year rather than assuming flat average growth every month. We will cover that in more detail when we get to it, but it's good to know that you can make your growth curve more realistic, not just a straight line. As you start filling in your growth assumptions, your target customers, your campaigns, your costs, your reach, you won't immediately see revenue change yet, because we still need to define pricing and conversions in the sales section. But you are building the top of the funnel. But for now, let's go back to the summary dashboard. Notice what's already changed. Now the monthly burn rate is showing 2,650 per month. That's the 2,500 SEO agency retainer and 150 keyword research software we entered, flowing through automatically. The runway is now showing 6 months, which is a real signal. It's telling you with the cash you have today and the level of marketing spending you have 6 months before you run out of money if no revenue comes in. This is exactly the kind of insight investors are looking for. Not just here our growth plan, but here what it costs to execute that plan, and here is the pressure it puts on the business. It shows you've thought through both sides of the equation. This is why entering your costs here matters. The model isn't just tracking reach, it's tracking what it takes to achieve that reach and making sure your financial picture stays honest. So that's the growth section at the high level. It's where you describe who you're targeting and how you plan to reach them, including what it costs to do so. And it becomes the starting point for the whole financial story. In the next episode, we'll move into the sales section, where we will connect this growth to actual revenue by defining your pricing, your revenue model, and your cost of sales. And we will start to see how your campaign turns into customers and into revenue in the model.